Most people believe their bank is a vault, a high-tech fortress where your money sits behind reinforced steel, waiting for you to come back and claim it. But the moment you walk out of those sliding glass doors, your money isn't sitting in a vault. It isn't even in the building. In the eyes of the law, the money you just deposited is no longer yours. You didn't store it. You gave the bank an interest-free or nearly interest-free loan. You handed them a gift, and right now, they are using that gift to make more money than you will see in a lifetime, while you're left holding a digital receipt and a plastic card. Let's look at the math, because the math is where the insult lives. You put $10,000 into a standard savings account. If you're lucky, the bank gives you 0.5% interest. In a year, they've paid you $50. Meanwhile, inflation is sitting at 3 or 4%. By the time you get your money back, it buys less bread, less gas, and less housing than it did when you walked in. You are paying the bank for the privilege of losing your purchasing power. But why do we do it? Because we've been sold a narrative of safety. We are told the bank is the adult's choice. But to understand why this is a gift, you have to look at what happens 5 seconds after the teller hits enter on your deposit. The bank operates on a system called fractional reserve banking. It sounds like a textbook term, but it's actually a magic trick. When you give them that $10,000, they don't keep it. They are legally required to keep a tiny fraction, sometimes as little as 0% in certain jurisdictions, and they lend the rest out. Your $10,000 becomes someone else's car loan at 7%. It becomes a credit card balance at 22%. It becomes a mortgage at 6%. They are taking your gift and selling it back to your neighbors at a massive markup. They are the ultimate middleman, and you are their unpaid supplier. Imagine if you gave a friend your car to watch while you went on vacation. Instead of parking it in a garage, your friend spent the week renting it out to Uber drivers, pocketing all the cash and returning it to you with an empty tank and a $5 bill for your trouble. You'd be furious. In the banking world, we call that a gold star savings plan. It gets deeper. This isn't just about the interest rate spread. It's about the power of the multiplier. When the bank lends out your money to buy someone a house, that money eventually ends up in another bank, which lends it out again and again. Your original $10,000 can effectively create $100,000 of new money in the economy. The bank is using your deposit as a lever to create wealth out of thin air. They get the assets, they get the interest, and they get the power. You get a monthly statement that tells you you've earned enough interest to buy a cup of coffee, if you're lucky. The marketing will tell you that your money is working for you. Look at the brochures. They show happy retirees and growing trees. But the reality is that a savings account is where money goes to die. It is a stagnant pool. The bank wants you to feel safe because a safe customer is a predictable source of cheap capital. They need your gift to keep the engine running. If everyone went to the bank tomorrow to reclaim their gifts, the system would vanish in hours. The fortress is actually a house of cards, built on the assumption that you will never ask for your car back at the same time as everyone else. When we zoom out, we see a global cycle. This system of using gifts from savers is what fuels the debt bubbles we see every decade. It's what allows the money supply to explode, which in turn causes the very inflation that eats your savings. It is a self-fulfilling prophecy. Your safe choice is making the world more expensive for you to live in. We are taught to be savers from the time we are 5 years old. We are given piggy banks and told that a penny saved is a penny earned. But in a world of digital finance and infinite debt, that advice is an artifact of a different century. So we have to ask ourselves, if the bank isn't a vault and the interest isn't a reward, what is it? It's a convenience fee. You are paying for the ability to tap a piece of plastic and see a number on a screen. But as you look at that number, remember that it represents a debt the bank owes you, not wealth you actually hold. The bank is currently out in the world playing a high-stakes game with your hard work, and they've invited you to watch from the sidelines. The question isn't whether you should trust the bank. The question is, if you are the one providing the fuel for the entire financial machine, why are you the only one not getting a share of the profit?